Hello traders, this is Umar with you. Hope you are all doing good. So in today's video we will talk about India VIX. As you may know, India VIX is very low. As a result of low VIX, what is happening is options premium are very low. If you do a straddle in July expiry, on July expiry you are not going to collect more than 300 or 350 rupees. So it is very cheap. Call side is selling at 150 rupees and put side is selling at around 160 or 170. So it's a very low premium. So what is happening here is it is giving some problems to option sellers. Option sellers make money when India VIX is when the premiums are good. So when the premiums are good, option sellers do a straddle. He is going to make good amount of money if the market doesn't move or if it is in range bound, right? Now what is happening here is India VIX is low, premiums are low, and people are hesitant, they don't want to take a straddle. The reason is very simple. India premiums are really cheap. Now it used to be like this back in 2015 or 2016. India VIX used to be around 10, 9 or 11. Now at that back then, what was the thing is that you don't have to spend so much money on margin money. A strangle would cost maybe 50 or 60,000 rupees and a straddle would cost maybe 70 or 80,000 rupees. But now it is not that. It is not the case. Now SEBI has increased everything. Margin money has increased. You do a straddle in July expiry, it is going to cost you around 1.25 lakhs. And you do a strangle now, you are going to shred around 80 or 90,000 rupees. So what happens here is your margin money is increasing at the time the premiums are cheap. So what option sellers face is their return on investment is going to be low. They spend more money and they are getting very small. That's what is happening here. So anyway we cannot do anything about that. Even in these cases, if the markets are if the VIX is very low, what does that mean is that market is not going to make any big or violent move. So market is stabilizing. Market should be range bound. Even if it moves, it is not going to make any big move unless until we have a very strong positive or negative news. So market is going to be very smooth, and in fact it 70% or 80% of your trade is going to be in profit only. You do a straddle, you do a strangle or any other strategies, you are going to make money. If you are not happy with straddles or strangle, there are few other strategies which we are going to discuss in this video, which might be of help to you. Since most of us think that premiums are very low. I know some people or somebody call me and tell that premiums are very low, how to do or how to handle this situation, because you know, these people who entered into the market in 2020 or 2021 are not used to this low VIX environment. So we will see some strategies which is going to help us in this low VIX environment. So the first strategy what I am going to explain here is the first strategy is ratio spread. So on I am on Sensible, Zerodha's Sensible platform. So what I am going to do is I am going to construct a ratio spread, simple ratio spread. So what is a ratio spread? You buy at the money call option, and I am constructing a call ratio spread, and sell out of the money call option in two lots. So one lot of call 15,850 call is costing me 182 rupees. So to finance that call, what I am doing is I am selling 16,050 call for 90 rupees, two lots. So this is finance. This selling is financed. So this buy is financed by this selling, right? So my break even point here is going to be 15,854 on the lower side, and on the upper side my break even point is going to be 16,246. So the total margin here is around 46,000, let's say 47,000, right? So if the market, say if you are bullish and if the market moves on the upside, you are going to make a good amount of money, right? Your calls will be in the money, and your out of the money calls which you have sold is going to be which is going to expire worthless, so you're going to make money there as well. So this is one strategy which you can use in case you feel the straddles or strangles are not premiums are very cheap and you don't want to do. And you have other issues also. In case you do a straddle or strangle, and if the market keeps on moving in one direction, there is some bad news or there is some good news and market moves violently, so you are going to make a loss in those strategies. So what you can do is you can do a ratio spread, and if you are bullish you can do a call ratio spread, and if your view is right, and if the call is in the money and the out of the money call option which you have sold expires worthless, you are going to make a money. But in case if your view is wrong, if not wrong, if in case the market you are bullish, so you have done a ratio spread, right? In case market is super bullish and if it crosses above 16,200 in this case, then you are going to make a loss. So you will have to know what you have to do. In case you don't know what to do, we have done a adjustment for ratio spread. You can click the link above, or I'll put somewhere in the description so that you can check. So this is the first strategy. So maximum requirement for this strategy is going to be around 46,000, and the premium is around 200 rupees you will have to pay from your pocket, right? So this is the first strategy. So the next strategy is going to be a calendar strategy, calendar straddle. Let's say it a calendar straddle. So what I do is I go to 8th July expiry. I'm talking about Nifty. I sell a straddle at 15,850, right? And I go to the next expiry, that is July expiry, and I do a long straddle, right? I do a short straddle as well as I do a long straddle in the same strike but different expiry. Now what this is called a calendar spread. So this is going to be a debit strategy. That means you are going to pay. You will have to pay around 6,521 rupees for this strategy. So the total fund needed for this strategy is around 70,000, and the maximum loss is going to be 7,256. The maximum profit is going to be 6,631. So these are the strategies. This is a hedged position. So in case the market goes down, or if you are neutral, you can do this strategy, right? So this is a debit strategy. You have to understand that you have to pay, at least you will have to have around 75 or 80,000 rupees in your account to do this strategy, right? Now the next strategy I am going to tell is a ladder strategy. So what is a ladder strategy? I'm going to buy I'm going to July expiry, and I'm going to buy 15,850 call option, and I'm going to sell 16,000 call option, and I'm going to sell another 16,200 call option, right? If my view is correct, if I am bullish in the market, and if my view is right, if the market is bullish, I am bullish, and if the market moves and closes between 15,876 and 16,323, I am going to make a good money, right? If the market moves on the downside, immediately you do this strategy. If the market moves on the downside, you are going to make a good, not good profit. You will come out of the trade with a good profit, since you have sold two calls, right? You have sold 16,000 call and you have sold 16,200 call also, and you have bought 15,850 call. Since you have sold two calls and you have sold two calls, if the market, once you do this strategy and market reverses immediately, you are going to make a profit. If the market moves as you anticipated, you are going to make a good profit. That's going to be around 6,155. I am talking about Nifty, and this is one lot. So you are going to make a good profit. If the market shoots up, if the market is super bullish, then you will have to do some adjustment, and you can do, maybe you will have to convert into a strangle, or you will have to convert into a straddle or iron condor. So it depends what is your risk appetite, and you can do these strategies as well. So we have mentioned here three strategies. One is ratio spread strategy, then second is calendar straddle, and the third strategy is ladder strategy, called ladder strategy. So these strategies are hedged position, partially hedged position, so you can't the premiums are the requirement funds required for these strategies are really low, and in case you are bullish or in case you are bearish, you can do the opposite side. Whatever I showed you is for bullish sentiment. In case you are bearish about the market, you can do the opposite of what I did exactly, apart from that calendar straddle. So these strategies you can use to make profit if the market is neutral, and maybe you can mint extra money if the premiums are really low. And these strategies are not going to cost you much. It is going to be very cheap. Even if you had a small account of 3 or 4 lakhs, these strategies are going to help you and make some money. And of course, there's a disclaimer, you have to do it at your own risk and responsibility. So I think this video might help you, and thank you for watching. Take care, and let me know your thoughts in the comment section below. Take care. Bye.